Bloomberg Audio Studios.
Podcasts, radio, news.
Things are very pricey, unlike late last year.
It's not easy for us.
You might get something of 10,000 naira today. Tomorrow you get it for 12, 13,000 naira. Just keep hoping it will be better one day.
As we were just hearing from these Nigerians, times have been difficult, and the prime suspect seems to be the Naira. Over the past few years, the Naira has experienced multiple downsides, but most recently, some upside too. What is still down, though, is Nigerians' spending power. They are yet to reap the benefits of the Naira's recent rebound. So how can you go from being a weak currency to the best in the world and then losing ground again? And what does a stronger currency mean for the economy of one of Africa's biggest markets? This is what we are going to talk about this week with my colleague and Lagos Bureau Chief, Anthony Osae-Brown. I'm Jennifer Zabasajja, and this is the Next Africa podcast, bringing you one story each week from the continent, driving the future of global growth with the context only Bloomberg can provide. Thank you so much for joining us. Anthony, you're very busy, and it's an honor to have you step away from watching what is going on in Nigeria and mainly what is going on with the Naira. It's been a whirlwind roller coaster day after day for you and all of the team. Let's just rewind back, though, to May of 2023, when Bola Tinubu, who's the current president of Nigeria, came to power.
Bola Tinubu has won Nigeria's presidential election.
It's a victory that will place him at the helm of Africa's biggest economy.
Can he fix the economy given his mandate?
Should we start there when we're thinking about the Naira and the roller coaster that has been the past year? What's your take?
I think that's a good point to start, because before that point, the Naira was pegged against the dollar. President Tinubu got inaugurated 29th May, and one of the first things he said during his inauguration was that the way the monetary policy has been managed before then wasn't right, and he was going to make sure reforms are made. And within a week, the former central bank governor was sacked, and someone was appointed in acting capacity, and steps were immediately taken to remove the Naira's peg against the dollar. And since then, as you said, it's been a roller coaster ride for the currency.
And Anthony, maybe you can talk us through the first few months. President Tinubu was announcing new policy after new policy. Are these reforms actually working in favor of the Naira?
We could say it's working. They reduced the differential between the parallel market rate and the official market rate. That has largely worked. From about 70% differential between the official rate and the parallel market rate, it has dropped to almost nil. In fact, we have seen situations where the parallel market rate is weaker or is stronger than the official market rate. So that multiple rates, or the rate differential between the official market rate and the parallel market rate, no longer exists practically in the market. And that means more people are willing to bring in dollars through the official market than through the parallel market. And that has also led to improved liquidity in the official market. So we could say in that sense, it has worked. The Naira is weaker, but somewhere around March, we saw it actually appreciate strongly and became the world's best performing currency. It moved up almost, I think, 30 to 40% before it started losing ground in April again.
And how has this and some of the other reforms Tinubu has put in place actually had an impact on the economy in Nigeria?
Yeah, it's been a bit devastating for a lot of people, ordinary people on the streets. The sharp devaluation in the currency, along with the partial removal of subsidy, has led to a spike in inflation, which was already rising even before the devaluation of the currency. So inflation is currently at nearly a 3-decade high and keeps rising. That's almost at 33.7% or thereabout as of March. Food inflation is higher at 40%. And that's huge because if you consider that most Nigerians spend more than half of their income on food, that means the sharp rise in food prices has forced most of them to prioritize food expenses above other necessary expenses like medical care and education.
For people who are not local to the region, to Nigeria, what does that look like? If you're going to the grocery store, how is that translating?
Well, most Nigerians shop in the open market. One practical example is Nigeria's popular jollof rice.
Oh, we love jollof rice.
Yeah. So as at March, the price of rice, the main ingredient for jollof rice, jumped up by 150%. That's almost nearly 3 times the normal price. So a lot of people may no longer be able to eat jollof rice on a daily basis because the price has jumped up significantly and can no longer afford it.
I bet then, Anthony, if you were to ask the ordinary Nigerian versus maybe a market participant whether Tinubu's reforms are actually working, they may have strikingly different answers.
So on the streets, everybody thinks Tinubu is failing. There's been some trends on X where people have been trending Tinubu must go. That's because they feel he's causing a lot of suffering for people. So there's a huge differential between how investors and foreign portfolio investors and analysts look at the economy and the way ordinary people on the streets look at the economy. For ordinary people on the streets, they are not seeing any benefits in what the government is doing. But for the analysts, what Tinubu is doing is the right thing and is taking the steps in the right direction.
And what about businesses, Anthony? Is this a more stable environment for the private sector?
Yeah, for the private sector, for the long term, most of them see the likely positive outcomes of the current reforms. But currently, most of them are suffering. Most of them have run into heavy losses, basically because of the huge devaluation in the currency. The nearly 70% devaluation in currency has plunged most of them into losses. That's because most of them had foreign currency obligations. Most of them are struggling to survive, but most of them are positive in the sense that if they survive the current reforms and they are sustained, then they think in the long run, Nigeria will be a better place to operate in. But in the short term, they are seeing a sharp erosion of people's purchasing power. They're seeing a sharp erosion of the growth that they've been having the last few years in Nigeria. Most of them will have to recapitalize. And so they are calling on equity from their parent companies and from shareholders to be able to recapitalize and survive the difficult period they are in. On the positive side, most of them are able to meet their dollar obligations currently from the market, which wasn't the situation before now.
Stay with us. After the break, we'll discuss how the Naira's crisis and the president's reforms are affecting the informal sector and what Nigeria could do to boost its economy. Welcome back. So, Anthony, tell us, how's the Naira and also Tinubu's reforms affecting the informal sector, which is a significant portion of the economy, and also small businesses?
I think the statistics agency put Nigeria's informal sector at almost 90% or more of the economy. So this for them is a huge deal. But one of the biggest areas that has affected them is in the working capital. So suddenly they realize that they need more money to buy the goods that they used to buy.
So Anthony, what's your sense? When will growth actually pick up? And where will it pick up? Is it the oil sector for Nigeria? Or are there other sectors that the country is looking to?
The oil sector is the low-hanging fruit. Current production, crude production, is around 1.23 million barrels a day. But Nigeria's potential capacity to produce crude is somewhere around 1.8 to 2.6 million barrels per day. So if Nigeria were able to tap into its available capacity, it could actually increase oil production anywhere between 40 to 50% in the next few months. That has been difficult because of oil theft, old assets that are difficult to push up, and then a lot of bureaucratic challenges. But oil is one of the easiest areas that Nigeria could easily add growth, push growth. Then there's also the non-oil sector reforms around taxation, and those areas are areas that Nigeria could boost revenues.
And Anthony, just to wrap up, I'm not going to ask you to predict where the Naira is going to go next. I don't think that would be fair, but maybe you can give us some insight into what to look for in terms of what might drive the next price action of the Naira. There must be something that you're waiting out for.
It's a bit difficult to say. In the short term, the government is expecting some inflows. So the government has relied so far on portfolio inflows to drive liquidity in the foreign exchange market. That seems to be running out. So the government now has to look beyond that to get some inflows in. Immediately, they're expecting $1 billion from the Afrexim Bank out of $3.3 billion that they asked for. They've already gotten $2.2 billion. There's a World Bank loan that they're expecting. That's $2.2 billion, maybe in June. And then I think maybe another $1 billion from Africa Development Bank. If all these monies come in between now and June, maybe they will help support the Naira, and we could see some strengthening soon. But if they don't come, then the Naira will be in trouble. Beyond that, the other support for the Naira could be in increased oil production. Then that will bring in more dollars to support the currency. That's more sustainable in the long run than the borrowings that the government is expecting, because those borrowings also means additional interest expenses, which will eat away at liquidity in the long run again. The last and most sustainable one would have been to go to the IMF to take a huge loan. Some analysts estimate that Nigeria could get up to $20 billion if it approached the IMF. But the Nigerian government actually sees the IMF as sort of an anathema, something that they will never discuss or something that they will never want to consider.
And our thanks to Anthony Osae-Brown, our Nigeria Bureau Chief, speaking with us, giving us his insights in Lagos. This program was produced by Leon Ouedraogo with the help of Emele Onu. You can hear more stories like this one on the Next Africa podcast, available every week wherever you usually get your podcast. I'm Jennifer Zabasajja. Thank you for listening.